Hello and welcome back to Bitcoin Dorks, your daily source for all things cryptocurrency. Today we have some exciting news to share with you. Europe has officially approved a new law concerning Bitcoin and other cryptocurrencies. But the question on everyone's mind is, when will this law take effect? Let's dive into the details of this new law and what it means for the future of cryptocurrency in Europe. First, let's talk about the specifics of the law. The law, which is called the Markets in Crypto Assets (MiCA) regulation, was approved by the European Parliament in September 2020. The goal of this law is to regulate the cryptocurrency market in Europe and provide more clarity and protection for consumers. One of the key aspects of the law is that it will require all cryptocurrency providers to register with European authorities and comply with a set of rules and regulations. These rules will cover areas such as transparency, security, and investor protection. The law also aims to prevent the use of cryptocurrencies for illicit activities such as money laundering and terrorism financing. To achieve this, the law will require cryptocurrency providers to conduct due diligence on their customers and report any suspicious activity to the relevant authorities. Now, let's get to the question everyone wants an answer to: when will this law take effect? The short answer is that we don't know yet. While the law was approved in September 2020, it still needs to be formally adopted by the European Commission and then implemented by individual member states. This process could take some time as the law is quite complex and there are many details to work out. However, it's worth noting that the European Union has been quite active in regulating the cryptocurrency market in recent years, so they will likely move quickly to implement this new law. So what does all of this mean for cryptocurrency enthusiasts in Europe? Well, in the short term, it may not have a significant impact. Cryptocurrency providers are already subject to some regulations in Europe, and many of them are already taking steps to comply with the MiCA regulation. However, in the long term, this law could have some major implications for the cryptocurrency market in Europe. Providing more clarity and protection for consumers, it could make the market more attractive to mainstream investors and institutions. This, in turn, could lead to increased adoption and growth in the industry. Of course, there are also potential downsides to this law. Some critics argue that it could stifle innovation and make it more difficult for smaller players to enter the market. Additionally, there is always the possibility that the law could be too restrictive and limit the potential of cryptocurrencies to disrupt traditional financial systems. Though it's clear that this new law represents an important step forward for the cryptocurrency market in Europe, while we don't know exactly when it will take effect, we can be sure that it will have a significant impact on the industry once it does. As we mentioned earlier, one of the main goals of this law is to provide more clarity and protection for consumers. This is a major issue in the cryptocurrency market, which has traditionally been seen as a wild west of sorts with few regulations and many risks for investors. By requiring cryptocurrency providers to register with European authorities and comply with a set of rules and regulations, the MiCA regulation could help to reduce some of these risks and make the market more appealing to mainstream investors and institutions. This, in turn, could lead to increased adoption and growth in the industry. Another potential benefit of the MiCA regulation is that it could help prevent the use of cryptocurrencies for illicit activities such as money laundering and terrorism financing. This is a major concern for many governments around the world, and it has been a major obstacle to the widespread adoption of cryptocurrencies. By requiring cryptocurrency providers to conduct due diligence on their customers and report any suspicious activity to the relevant authorities, the MiCA regulation could help address these concerns and make it more difficult for criminals to use cryptocurrencies for nefarious purposes. However, there are also some potential downsides to the MiCA regulation. One concern is that it could stifle innovation and make it more difficult for smaller players to enter the market. This is a common issue with regulations in general, as they can create barriers to entry that favor larger, more established players. Additionally, there is always the possibility that the MiCA regulation could be too restrictive and limit the potential of cryptocurrencies to disrupt traditional financial systems. This is a concern that has been raised by many in the cryptocurrency community, who see cryptocurrencies as a way to challenge the status quo and create a more decentralized financial system. Despite these potential downsides, however, it's clear that the MiCA regulation represents an important step forward for the cryptocurrency market in Europe. By giving customers additional protection and clarity, it may draw mainstream investors and institutions to the market. This can then result in a rise in industry acceptance and expansion. Of course, it's important to remember that the MiCA regulation is just one piece of the puzzle when it comes to regulating the cryptocurrency market. Many other issues need to be addressed, such as taxation, custody, and cross-border regulations. Nonetheless, the MiCA regulation is a significant development and one that could have a major impact on the future of cryptocurrency in Europe. We'll be keeping a close eye on this issue and bringing you updates as they develop. That's all for today's episode of Bitcoin Dorks. Thanks for tuning in, and be sure to